is going to judge your ability to pay based on cash flow. So there should be a way. And that argument is false.
No, so this is fair. So exactly. Now coming to the GST, let me bring GST in. So all those self-employed individuals or small businesses, I mean, right now banks can evaluate their turnover based on the GST returns that they file.
Yeah.
So yes, there are multiple other sources. But that's an excuse if an individual gives, say that I'm taking a loan only to build a credit history. Sure. I don't think that is even holding any good stead in anybody's argument. So if you're fooling yourself by saying that, look, I'm taking a loan right now so that if I want to take a loan later on, I will have a credit history. No, I think don't even get into that zone.
And the kind of loans that people get into, therefore, are your relatively smaller ticket loans. Your credit card, of course, they get into credit card spends. Hopefully, people are not getting into credit card debt. What are the big no-nos? Personal debt, unsecured, and credit card debt. Would you say that big no-nos?
Absolutely. To begin with, to roll over a credit card outstanding is one of the most, unproductive or a most, I would say, a biggest mistake that a person could, do is to roll over your credit card outstandings because that entails an interest of almost 30 to 40%.
Yes.
So you don't want to pay that kind of and then again the credit history gets negatively impacted. Okay, so that's one that you avoid by all means. The other is the personal loans and the unsecured loans because they come at a higher interest rate. Invariably, they would be in between 14 to 18% is what you're going to pay for an unsecured or a personal loan. The third, of course, as much as anybody would say that these are zero interest,
buy now, pay later.
Buy now, pay later. Those websites will entice you to say that you spend now, pay later, and these are zero interest. Nothing in life comes for free.
Yeah.
Okay, they're very smartly packaged offers to you that you don't realize that you're actually you're paying for it eventually. So these travel portals where you go in and you say that you go on a luxurious holiday, exotic holiday, and you just pay so much EMI. I think that's the problem that people are falling into. To say that, look, I'll go on a holiday now and pay it over 6 months out of my salary. I don't think, why don't you go for a holiday after 6 months?
Yeah.
I mean, accumulate it and save it up and spend, because holiday is certainly not a thing that you'd want to spend by taking a loan. I don't think that is even reasonably making any...
Set up a travel fund.
Travel fund. I mean, and travel is not something that you need to take a loan for. I mean, if you're falling into that zone, then there is something that you need to be careful about. You need some kind of guidance and consultation to come back out of this. Because if you're going to spend on a holiday out of loan, that means your other priorities that are there in life are not going to be taken care of.
Okay, so we've discussed the quantum that your EMI should be, not more than in your income. We've discussed what type of loans you can consider taking. Let's also consider, if you have loans existing, how do you knock them off? And how do you dramatically reduce your interest cost? Obviously, by paying lump sums, but some people have also talked about paying one extra EMI every year. It's a simple concept. A lot of people diss it on social media. I've seen this as well. But it is a powerful concept when it works.
Absolutely. So it's nothing, no rocket science. I mean, we as Indians have been, have grown up with these money habits.
Yes.
Quite honestly, even if you're a family of engineers, still your parents will be telling you to be prudent with your money.
Yeah.
So they will tell you that, don't spend XYZ amount. If you've taken a loan, try and repay. So that every time that a person gets an increment in the salary, why don't you ever consider increasing your EMI? Okay, so you fixed your EMI at the beginning of taking the loan. And that is for, say, probably 15, 20 years. Why don't you go back to your banker and say, look, I want to increase my EMI by 10%.
So bankers are not going to thank me for saying this, but a lot of them will say, increase your tenure and not your EMI, because over the course of a longer tenure, your interest cost goes up.
Absolutely.
So the bank earns more.
We just discussed this. Over a period of 20 years on a loan of 1 crore, you're paying 1 crore 16 lakhs as interest.
Yeah.
So obviously, you're paying more than the principal that you borrowed. So you'll need to go back to the bank and say, look, I want to increase my EMI by 10%. Let the interest rate be constant. I mean, the tenor be constant. Let me just increase my EMI. The other concept very popularly is that instead of 12 EMIs in a year, you pay 13 EMIs.
Yes.
Because you get a bonus, you get a performance-linked incentive, you get those lump sums. So just go and just prepay one additional EMI every year. You see the magic when their tenure reduces considerably by just one additional EMI. Or additionally, when the interest rates are going to fall, and then an offer comes from the bank saying that, look, hey, the interest rate has fallen. Do you want to reduce your EMI? No, you keep your EMI constant. So automatically the tenure of the loan will come down. So you'll be able to repay that loan faster. The net interest burden on you will come down.
Yeah.
So of course you need to evaluate well within whether it's a productive loan or an unproductive loan. All those kind of things.
The last thing I want to